When we're distinguishing financial accounting from managerial accounting, we have to focus on the users of the information. So, who are the primary users of the information? Well, in financial accounting, those are the external users like creditors, stockholders, and government regulators. And in managerial accounting, the internal users of the information are managers. Okay, so we have internal users and external users. As a managerial accounting, we focus on the internal users because managers need to make decisions as it relates to, how many people can I hire? Do I need to lay off some people? Do I need to cut back their salaries? Can I order more supplies? Can I pursue a marketing plan? So those are the types of decisions that managers make internally. And externally, of course, creditors are going to extend credit to the businesses. Stockholders want to see how attractive the business is to them and if it's going to give them a return on investment. And of course, government regulators, the Internal Revenue Service, the state in which the organization operates, and of course, the Securities and Exchange Commission if it's a public company. Now, what is the purpose of the information? Well, if you're a managerial accountant, you're going to help managers plan, direct, and control business operations and make business decisions. And in financial accounting, what it does, it helps those external users make investing and lending decisions, as we see with the creditors and the stockholders. What is the primary accounting function for a managerial accountant? Well, any internal accounting report deemed worthwhile by management. And to the external user, we look at financial accounting. The financial statements is the primary accounting product. And what must be included in the report and how must it be formatted? Well, management determines what it wants in a report and how it wants it formatted. Reports are prepared only when management believes the benefit of using the report exceeds the cost of preparing the report. So that would be the internal user and the report being prepared for management to make decisions internally. And for financial accountants, which are focusing on the external users, financial accountants are gonna focus on the generally accepted accounting principles known as GAAP, and they're going to determine that the content and format of the financial statements adhere to those generally accepted accounting principles known as GAAP. And lastly, what is the underlying basis of the information? We look at managerial accounting, and we see that while some information is based on past transactions, managerial accounting focuses on the future. It provides information on both external and internal transactions. While the external users are looking at information that is based on historical transactions with those external parties, which is the original intent of presenting external users with financial statements. Okay, and keep in mind that the financial statements that we're going to be referring to are the four financial statements that one learns in financial accounting. And you're going to learn them in this class too, because it's very important that as a manager, you know what the four financial statements are. If there is something that I really want for you to take from this class, is to know those four financial statements. I know that you're going to work diligently and you're going to pursue a lot of effort in this course to learn a lot of the managerial accounting concepts, but it's going to be really important for you as managers to really know what those four financial statements are, and it's really important for you to know what they consist of. What are the elements inside each of those financial statements? So you have the income statement. The income statement includes revenues and expenses. And when revenues exceed expenses in the income statement, you have a net income. If expenses would exceed revenue, you would have a net loss. And that is the first financial statement that one prepares. Because the second financial statement that one prepares is the retained earnings statement. And in order to prepare the retained earnings statement, one needs to have the net income from the income statement. And for the retained earnings statement, you need to see if you had any retained earnings for the previous period. You need to look at the net income. You need to subtract dividends, and that's going to be your retained earnings from that net income. Your third financial statement is going to be the balance sheet. And the balance sheet is a snapshot of the business's financial position at a certain point in time, which the balance sheet will have the business's assets, which are cash, accounts receivables, marketable securities, a building, land, vehicles, patents, copyrights. Those are the assets. It's also going to have the liabilities, which are the accounts payable and the notes payable. And it's also going to consist of the owner's equity that has the amount of common stock and preferred stock. And in that section, we're also going to see the retained earnings. So that's why the balance sheet is the third statement that you prepare, because the retained earnings, the information from the retained earnings statement is going to go in the balance sheet. And lastly, the fourth financial statement that is prepared is the statement of cash flows. And the statement of cash flows shows the inflow and outflow of cash from three activities. And those activities are cash from operating activities. Operating activities come from the income statement, from the revenues, and from the expenses. So it's cash, that is cash inflow from revenues and cash outflows from expenses. Then we have financing activity, which is from the sale or acquisition of stocks and bonds. Cash inflows or outflows as a result of selling stock or acquiring stock. And then investing activities is the cash inflow and cash outflow of acquiring or disposing of plant assets like land, buildings. So you sell a building and you have a cash inflow. You buy a building, you have a cash outflow. So that's the last financial statement, which is the fourth financial statement, the statement of cash flows. Operating activities, revenues and expenses. Financing activities, sale or acquisition of stocks and bonds. And investing activities, sale and acquisition of assets. So you have the income statement, number one. You have the retained earnings statement, number two. You have the balance sheet, number three. And you have the statement of cash flows, number four. And you have also seen how the difference between financial accounting and managerial accounting. I'll give you some other examples of managerial versus financial accounting. What information characteristic is emphasized? In financial accounting, the information must be reliable and objective. And in managerial accounting, the information must be relevant. Now, overall in accounting, which I mentioned earlier, it is the process of collecting, recording, and reporting financial information to interested users. And you have external users, they focus on the financial accounting. Internal users, they focus on the managerial accounting. But the information, of course, it has to be relevant. It has to be transparent. It has to be clear. It has to be understood. And ultimately, it has to be prepared with the proper conduct because of the ethics code. Okay. Does anyone need to verify the information as it relates to financial accounting? Well, independent certified public accountants audit the annual financial statements of publicly traded companies, and they express an opinion on the fairness of the financial information that they contain. In managerial accounting, there are no independent audits. However, the company's internal audit function may examine the procedures used in preparing the reports. Okay. Also, what business unit is the report about? Well, in managerial accounting, it's about segments of the business, such as products, customers, geographical regions, departments, and divisions. And in financial accounting, it's about the company as a whole, consolidated financial statements, and a limit segment data is provided in the footnotes of those financial statements. How often are reports prepared? Well, for the external users in financial accounting, annually and quarterly. And internally for the managerial accounting, it depends on management's needs. Some reports are prepared daily, while others may be prepared only one time. So this is the difference between financial and managerial accounting, and why external users need the information and why internal users need the information. Now, what is also important for you to know in this course is that you have three types of businesses, all right? You have service businesses like Delta Airlines and American Airlines. Those are service businesses. You can look at Walt Disney as a service business. If you look at Delta and American Airlines, well, why are they service business? Because they provide transportation. They also provide the traveler experience that you have on the flight. So it's a service. And Walt Disney, they provide entertainment. Okay, so you have service businesses. You also have manufacturing businesses like General Motors. They manufacture vehicles. And they buy metal, they buy engines, they buy wires, they buy different types of components, and during the transformational process they produce those vehicles. And you also have merchandising companies like Walmart. Okay, so those are the three types of businesses. You have service businesses, you have manufacturing businesses, and you have merchandising businesses. So if we look at if we look at the operations of manufacturing businesses, a customer places an order, and then the organization buys the materials. Okay, so for example, if we look at a guitar company, and a customer places an order, obviously they want to buy a guitar. The customer wants to buy a guitar. So what does the organization need to do? Well, the organization needs to buy the wood. They need to buy the guitar strings. They need to buy the guitar bridge. And they need to buy all the other accessories needed for the guitar. So they have to buy the materials. Then there needs to be a cutting function, like cutting the wood and shaping it. And then there needs to be an assembly function where you put, that wood and the guitar bridge and the strings, and you put everything together. And once it is completely done, you have a finished guitar. So again, when customers place order, an organization that is in the manufacturing business has to buy the materials for that product. And then, of course, the work in process for in the example of a guitar is the cutting function and the assembly function, and finally you have a finished guitar. Now, direct and indirect costs, okay, weekly objective. A cost is a payment of cash, or the commitment to pay cash in the future for the purpose of generating revenues, okay? So we have costs that eventually are going to generate us revenue, like the cost that we incur in buying those materials that we looked at. And costs are often classified in terms of how they relate to an object or segment of operations, called a cost object. The cost object may be a product, a sales, territory, department, or some activity. And you're going to see that in the weekly assignment, you're going to be working with classifying costs. When we're looking at direct and indirect costs, a direct costs, and we focus on direct costs, those are identified with and can be traced to a cost object. So wood used to make guitars is a direct cost because, you need the wood in order to be able to make the guitar. So wood would be the direct cost. Indirect costs, those cannot be identified with or traced to an object. Like, for example, a production supervisor's salary is an indirect cost because it cannot be traced to any individual guitar. The production supervisor's salary is maybe supervising the engineer, or it's supervising the person that is cutting the wood for the guitar, but that production supervisor has other responsibilities within that factory or within that plant that are not necessarily directly related to the guitar. Okay, so that's why they're called indirect costs. And the process of classifying a cost as direct or indirect, you can look at it as identifying the cost object, which is the guitar, determine if the cost can be identified with and traced to the cost object. So what is traceable for the guitar? Well, the guitar bridge and the guitar, the wood for the guitar, those are direct costs. What is not traceable? Well, the indirect costs, like the production supervisor's salary. So we have direct materials are the wood for the guitar. We have those are direct materials. And you're also going to have the manufacturing costs. And we look at direct materials. We also look at the direct labor, which is the person that is directly involved with assembling that guitar. And then you have factory overhead, which is like the rent of the facility, the utilities, and so forth, which are expenses that you're going to have all the time. They're not directly related to that guitar, but it's factory overhead that you have. Now, when we look at the manufacturing costs, to be classified as a direct materials cost, the cost must be both of the following. It has to be an integral part of the finished product, and it has to be a significant portion of the total cost of the product. The cost of employee wages that is an integral part of the finished product is classified as a direct labor cost. A direct labor cost must be both of the following. It has to be an integral part of the finished product and a significant portion of the total cost of the product. Costs other than those direct materials costs and direct labor costs that are incurred in the manufacturing process are combined and classified as factory overhead, sometimes called manufacturing overhead, or it's also called factory burden. Some examples of manufacturing overhead costs, or known as factory overhead costs. For example, the heating and lighting of the factory, repairing and maintaining factory equipment, property taxes, insurance, depreciation of factory plant and equipment. Now, costs that do not enter directly into the finished product, such as oil used to lubricate the machinery, and janitorial and supervisory wages are considered factory overhead. Some costs that are part of the product but are considered insignificant are treated as factory overhead, such as glue and string. Now, you're going to have prime costs and conversion costs. Prime costs consist of direct materials and direct labor costs. So if you remember what direct materials and direct labor costs were, those are the prime costs. The conversion costs, those consist of direct labor and factory overhead. So if you remember direct labor, you remember factory overhead, now those are conversion costs. And conversion costs are the cost of converting the materials into a finished product. Okay? So you have direct materials, you have direct labor, and you have factory overhead. And then you have two categories, which are prime costs and conversion costs. Remember that prime costs consist of direct materials and direct labor. Remember that conversion costs consist of direct labor and factory overhead. Now, with prime cost and conversion cost, of course, prime costs are direct materials and direct labor, and then conversion costs are direct labor and factory overhead. Now, we have product costs and period costs. Okay, so period costs are generally classified as selling expenses, which are incurred in marketing the product and delivering the sold product to the customer. So those were the selling expenses. Now the administrative expenses are incurred in managing the company, and they're not directly related to the manufacturing or the selling of the products. Okay, so you have selling expenses in the way that you deliver and sell the product to the customer, and then the administrative ones, which are about managing the company, and they're not directly related to manufacturing or selling. So a direct materials cost would be the wood used in the neck and in the body of the guitar. The direct labor cost would be the wages of the saw operator, the wages of employees who assemble the guitar, and of course the factory overhead, or the wages of the janitor, the power to run the machines, the depreciation expense of the factory building, sandpaper and buffing materials that you need, for the guitar, glue that you need to use and assemble the guitar, and so forth. So period costs are selling and administrative expenses, okay? Remember that selling expenses are those advertising expenses, the sales salaries expenses, and the commission expenses. And the administrative expenses are the office salaries expense, the office supplies expense, the depreciation expense, the office building, and the equipment. And then, of course, product costs are, your inventory, the direct materials that you bought, and how much you paid for them. Well, excellent. So we have distinguished between financial accounting and managerial accounting. We have distinguished between direct and indirect costs, and we have identified product costs and period costs. Okay, so the assignments that you're going to have are you're going to participate in the in-class discussion. Remember that in week 1 we meet face-to-face, but from between week 2 and week 7 you're going to have discussion questions, and those discussion questions are going to focus on the weekly objectives that we have. Okay, and so in the instructions for your week 1 essay assignment, you're going to examine the managerial accounting, and we're going to look at the cost allocation and the classification table that is found inside your Blackboard course. Okay, so let's focus on the assignment that you need to prepare for this week, for week 1. And you have an essay assignment, and that is managerial accounting, cost allocation, and classification. And so the assignment says that using Microsoft Excel, classify each of these costs according to its place in the value chain. And in the value chain, you have research and development, the design, the production, the marketing, the distribution, or the customer service. That is the value chain. So you should have at least one cost in each value chain function. Okay, so what else can this mean to you? Well, remember that the value chain are the activities that add value to the company's products and services. So research and development, that adds value to the company's products and services because you're investigating what are the developments in the industry and how you can bring those developments into the company to optimize operations and become more competitive. Definitely the designs of your products, the production of your purchases, the marketing, how you're going to create, communicate, and deliver value to customers by having the right product at the right price in the right place, and distributing that product, and ultimately giving customer service, exemplary customer service. So that is why the value chain are those activities that add value to the company's products and services. And then the elements of the value chain, of course, in research and development, you're researching and developing new or improved products and services and the processes for producing them. The design, it's a detailed engineering of products and services and the process for producing them. And in the production or purchases, those are resources used by manufacturers to produce a product, or merchandising companies in purchasing finished or merchandise for resale. In marketing, you want to promote and advertise those products or services. The distribution is the delivery of those products and services to your customers. And customer service, you want to provide support to your customers after the sale. Okay, and then you're going to distinguish the direct from indirect costs and so forth on your assignment. So you're going to have the assignment is going to give you a table where you have delivery expense to customers via UPS, salaries of salespeople, and then you're going to have a cost associated to each of those functions. So delivery expense to customers via UPS is $9, sales salaries of the salespeople $4, exterior case for phone $6. So what you want to do is you want to, in using Microsoft Excel, you want to classify each of these costs according to its place in the value chain. So, which one belongs to research and development, which one belongs to design, which one belongs to production, marketing, distribution, or customer service. So you should have at least one cost in each value chain function. Once your spreadsheet is complete, what you want to do is you want to be able to analyze, discuss, and explain the importance of the three functions of managerial accounting and the impact that allocating costs has on accuracy, operational efficiency, and effectiveness. And you're gonna do this analysis in 1,200 words, and you want to make sure that the paper is written in proper APA format. Okay, so and then there's also the rubric for this essay assignment, and the rubric is going to allow you to know how the assignment is going to be graded regarding the content and of course the writing guidelines. So definitely use the rubric for the assignment to help you. Okay, and when you're using Microsoft Excel, what you probably want to do is on the left hand side of the spreadsheet, include the the delivery expense to customers, the salaries of salespeople, the same way that you see it in Blackboard. You want to use that information and put it in the first column, and then what you want to do is um, in the top rows is you want to include the elements of the value chain, and then you want to be able to match which element of the value chain matches with delivery expense, with the salaries of the salespeople, with the chipset, with the exterior case for the phone, and so forth. So this should be a fun activity for you to be able to um, for you to be able to match at least one cost in each value chain function. Okay, so the information is already given to you. It's up to you now to match it with those value chain functions. Okay, so once you have completed the Excel spreadsheet and you have matched each value chain function, then you want to write your analysis where you discuss and explain the importance of the three functions of managerial accounting and the impact that allocating cost has on accuracy. So throughout the video, I gave you that information, and you also have that in your readings of chapters 1 and 2. And you're also going to be practicing how you have understood that information by interacting in the discussion boards. So I'm very excited that we're going to be working together in the course. I look forward to interacting with you in the discussion boards and moving the discussions forwards. And then looking ahead into week 2, our next video lecture, you're going to distinguish between job costing and process costing, and that's why the material that we covered in week 1 is going to be a good solid foundation for us to move forward into week 2. So in week 1, if you have a solid foundation of managerial accounting and distinguishing financial accounting from managerial accounting, distinguishing between the direct and indirect costs, and identifying the product cost and the period cost, which is ultimately what you do to conclude in the assignment. Then looking ahead into week 2, we're going to distinguish those job costing and process costing functions. We're going to develop and use departmental overhead rates to allocate indirect costs. We're going to look at activity-based costing to allocate indirect costs, and we're going to understand the benefits and limitations of those activity-based costing systems. Thank you. Good luck in week 1. Good luck with your assignment. In the online classroom, you're going to have an opportunity to, again, ask me any questions that you have on the assignment, on the readings, or on the video lecture. So thank you for attending the week 1 video lecture, and I look forward to working with you in week 2. Thank you and good luck.